So last thing I want to talk about today was interest rates, because interest rates have been super low for the last year and a half or so.
Yeah.
And it's definitely fueling the real estate market, and it's keeping prices going up. What's first of all going to happen when we see interest rates go up? And then secondly, when do you think that's going to happen? What are your thoughts about where interest rates are and where they're going to head in the long run? It doesn't seem sustainable to me.
No, it doesn't. And at some point, America's got to start making money again on their money. They've been giving it out for free for so long, Zach. They have. I mean, if it's not one thing, it's the previous housing in 2008, 2010. Obama came in and said, we're going to buy, the government's going to purchase mortgage-backed securities to buy down interest rates. If you think about it, mortgage interest rates have not gone up. They've been at historic U.S. record lows since 2012, 2013.
Yeah,
they've peaked up into the fours a little.
We saw a little bit over 5 back in 2018, 17.
For a second. And then back down. So, but yeah, we saw in mid to upper fours flirting with 5 for a second, and then boom, right back down.
Yeah.
And so in comes COVID. The government, in order to keep the economy moving, what they can do at all times is just go print more money. Which they're doing. Huh? That's how they do it. The Federal Reserve has no limit. Debt ceiling doesn't exist, right?
Yeah, what's that?
Yeah, so you're hearing the Fed talk right now about this word called tapering. It's going to happen. It's going to happen. It was supposed to happen in October. It's not. Maybe November. It's going to happen at some point. What tapering means is the U.S. government is going to slow down their purchase, slow down them being involved with artificially lowering interest rates, okay? For right now, we're still, 30-year fixed rates are still in the upper 2s to low 3s, right?
Yep,
so they're still
low.
Buying a ton of mortgage-backed securities. The second they start tapering and you actually see that in the market, it's going to be a test to see if the economy can handle it. They've tried it before. The economy couldn't handle it, so then rates stayed low, or they stayed kind of where they were, right? And then we had COVID hit, and they dropped them back down even more.
To keep the economy going.
Yeah, so 2 things to consider. Recovery from COVID, economy getting back on track, small businesses starting to do better.
Yep.
And then tapering, okay? Tapering. So yeah, just be cautious of that.
So COVID and tapering, those are the 2 things to keep an eye on. No crystal ball though.
No crystal ball, but what I tell my clients when they ask, hey, when are rates gonna go up, or what do you think? I think the most transparent and truthful answer is, I don't know. Yeah. I mean, if I had to give you nobody wants my opinion or prediction, right? They want somewhat fact-based answers. So I would say, as you hear in the media or you talk with me, or you could subscribe to my weekly emails where I talk about rates, are they going up and why?
It's not a bad idea.
Every week. But yeah, just focus tapering, and as the economy gets back on track with COVID, rates are gonna follow quickly right after that.
So what happens when rates go up? I mean, people are able to buy houses right now. They're getting a super good rate. What happens when rates go up to the affordability of those houses?
Awesome question. So let's just say, for example, that client that you just sold that $800,000 house to, and they put 20% down on that house. That same house, if rates go back to where they were pre-COVID, we're talking February of 2020, 4.5%, 30-year fix. That's still a very healthy 30-year fix. That's a good rate.
Yeah, it's
right?
a great rate.
If rates go back from where they're at right now to that, you're looking at almost $500 a month more for that house that you just sold a client a house to today.
Wow.
Yeah.
That's a big jump.
It's a big jump.
Price is the same?
So price is the same. So this is the other thing that I tell all my clients. Don't focus on home value right now. Don't focus on overpaying for a house. You're not overpaying for a house. If the seller wants to sell the house for $800, you're willing to pay $800. In the back of your mind, you're like, well, I would never pay, or my dad would never pay $700 for it. It doesn't matter. It's $800. You're willing to pay $800, and an appraiser, through data and comparable sales, appraises it for $800. You didn't overpay for that house. You paid fair market value for that $800,000 house. Don't focus on home values right now. Focus on the rate. The rate is your opportunity, not lowballing a seller, because you're not lowballing sellers, and
doesn't
that
work
time will
right now.
probably not happen for a long time, right? Focus on the opportunity right now, which is historically low 30-year fixed rates.
Great thoughts, Dan. Well, thanks for coming on and talking with the audience here. And I always like to bring value, and you always got a lot of value to bring. So I appreciate you sharing some of that. Do you have any last thoughts as we wrap up?
Yeah, just like we said, I'm passionate about financial education. If you'd like to learn more, again, it's free, no strings attached, budgetwithdan.com. If you have any questions, you can reach out to me. I'd love to have a mortgage conversation with anyone like we do with so many of your clients. But that's my gift to you and your viewers.
Yeah.
Budgetwithdan.com. And I hope this information blesses you as much as it's blessed my life.
Yeah. Well, thanks so much for being on here. And make sure you guys go and subscribe to Dan's YouTube channel. We'll link it up down below.